Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous?
It's a new trading day. Welcome to Modern Investing Techniques, episode 94. It's July 2nd, 2026, and I'm Patrick in Vancouver. Let's get into the numbers, the strategy, and today's AI-selected trade. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. Retailers front-loading imports ahead of tariffs are pushing shipping rates higher. Consider exposure to logistics ETFs in your TFSA. The S&P 500 closed at 7,483, down 0.2%. The NASDAQ Composite finished at 26,040, down 0.7%. The TSX Composite rose 0.1% to 34,857. Chip stocks dragged global benchmarks lower, with South Korea's Kospi falling nearly 8%. Traders are pricing in steady Bank of Canada and Fed policy through summer, while energy faces fresh geopolitical tension around the Strait of Hormuz. The June jobs report due tomorrow carries a Goldman estimate that the World Cup could add 40,000 to non-farm payrolls. Portfolio cumulative return stands at $263.15, with 11.0% alpha versus the NASDAQ across 30 benchmark trades. Benchmark year-to-date moves and portfolio year-to-date return data are not available in today's feed. Leveraged ETFs let investors magnify exposure to specific themes like AI without buying individual stocks. Today's chip stock sell-off creates a timely test of whether these products deliver amplified upside or simply larger drawdowns when sentiment shifts. Implementation starts with screening for 2x or 3x ETFs tied to semiconductor or AI indexes on platforms such as Questrade or Interactive Brokers. Position size stays at 5 to 10% of the speculative sleeve. These vehicles performed best during the 2023 to 2025 AI rally, when volume confirmation accompanied earnings beats. They also produced outsized losses during the 2022 rate hike period. The key risk is daily reset mechanics that cause compounding drag in sideways or volatile markets. Always compare the ETF's 20-day average volume against its assets under management before entry to avoid liquidity traps. This approach demonstrates how to stay disciplined when news creates a theme but no individual security yet offers a confirmed setup. Listeners learn to define explicit trigger levels rather than chasing headlines. This is a simulated trade for educational purposes only. No new position was initiated today because tariff policy remains fluid. The catalyst is retailers accelerating imports ahead of potential Trump tariffs, pushing shipping rates sharply higher. No specific ticker yet meets volume and RSI criteria. We are waiting for a logistics-related name to show RSI 14 below 40 with above average volume. Premature entry risks reversal if negotiations ease tensions. Confidence sits at low because we have a single macro catalyst without price confirmation or sector breadth. This restraint paid off yesterday when our MU momentum trade reversed without follow-through. We simulated buying MU at $1,233 at market open and exited at $1,213.56. The position lost 1.58% or $15.77 on a $1,000 stake. The NASDAQ fell 0.7% over the same window, so the trade produced negative 0.88% alpha. The single-day momentum entry reversed without follow-through, showing that earnings revision signals need sustained price action rather than opening strength alone. Our new rule requires closing price confirmation before declaring any catalyst trade complete. Robinhood's CEO described AI agents that will soon execute trades at human-trader level, giving retail users automated pattern recognition previously limited to institutions. The feature is expected to roll out first to active users on the platform's premium tier. Canadian investors can access similar functionality via Wealthsimple's API or Interactive Brokers Trader Workstation once the tools mature. NVIDIA will let AI-focused startups trade GPU access for a slice of future revenue instead of upfront payments. This lowers the capital barrier for smaller funds experimenting with custom models. Access requires applying through NVIDIA's enterprise portal and targets firms already using its DGX cloud. South Korea's Kospi dropped nearly 8% on heavy selling of semiconductor names. Trim any existing 2x semiconductor ETF exposure if it closes below its 20-day moving average. OpenAI offered a 5% stake to the U.S. government to ease political pressure. Hold existing AI-adjacent positions, but add a 2% cash buffer ahead of potential regulatory headlines next week. Germany approved a €10 billion tax relief package that includes income tax cuts and labor market measures. Watch European financials for relative strength versus U.S. peers on any further fiscal announcements. Total trades now stand at 37 with a 57% win rate. Cumulative P&L sits at $263.15. Cumulative alpha versus the NASDAQ reaches 11.0% across 30 benchmarked trades. Average return per trade is 0.71%. The current streak is one loss. Our AI analysis is learning from the need for closing price confirmation and adjusting future catalyst screens accordingly. Imagine you bought a consumer stock last week after seeing a headline earnings beat estimates. Your order filled at the open, but the stock dropped 4% by lunch. The mechanism behind that gap is the difference between headline EPS and the full picture in the 10Q. Revenue growth tells you if the top line is expanding, while EPS can be inflated by one-time tax items or share buybacks that will not repeat. Forward guidance from management is the real signal because analysts update models within hours of the call. Check the balance sheet for rising long-term debt or falling cash. Free cash flow that diverges sharply from reported earnings is a red flag. Professionals always read the management commentary section for phrases like, "We expect headwinds to persist," before deciding whether the beat is sustainable. The biggest mistake with earnings is reacting only to the EPS headline. Instead, always compare actual revenue and guidance against the prior quarter and consensus estimates before adjusting position size. Before we wrap, open your brokerage screener tomorrow and filter logistics ETFs with volume above 500,000 shares to check their 14-day RSI. That's it for today's Modern Investing Techniques. The resources page has links to everything we discussed. Subscribe and share with someone who wants to go beyond index funds. See you tomorrow, and if you'd rather watch than listen, find us on YouTube at NARA Network. Links in the show notes. And before you go, this show is part of the NARA Network, a family of daily podcasts on tech, science, and markets, each one a short, sharp briefing you can finish on the commute. If today earned its place in your feed, here's your next listen. Models and Agents for Beginners. Artificial Intelligence Explained Simply for Beginners and Curious Teens. Find every show free at naranetwork.com. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you